Hey, folks, welcome to Weekend Technical Analysis Update by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. This Weekend Technical Analysis Update is for Monday, January 10th through Friday, January 14th, 2011. Well, folks, what you're looking at here is the condensed 10-minute chart as I zoom out to show the last 5 trading days. And again, going all the way back to the close of the 31st of 2010. Here's the first on the gap up. You can see we had a strong gap up last Monday, a move to the upside, a little bit of a gap and go, a small fade towards the afternoon. And then from that day on, it was really just choppy. You went down, up, and then choppy, choppy, choppy. And then on Friday, again, down and then back up. Now, the interesting thing that has to strike you on this chart is the resiliency of the market. This is something we've seen very, very often. And for those of you that are more in depth and understanding and not the amateurs out there, you'll understand what's going on here. Essentially, you have the light volume effect. And this light volume effect has been intact since really right around Thanksgiving or a little bit before Thanksgiving, something we talked about in depth. And again, what you're having not only is the light volume, but the Federal Reserve POMO at work. And permanent open market operations is the term used on a daily basis for QE2. Now, QE2 was the big thing, the 600 billion. If you divide it into individual days, it becomes POMO, permanent open market operations by the Federal Reserve, where they buy treasuries, infusing money into the banks. The banks then push the money into the market to prop the markets up. The dollar generally is looked at as being a weaker force then, which props up asset prices by inflating them and so forth. So it's a little bit of an artificial inflation type event that the Federal Reserve is doing, but that's what they're doing. And you can see it intact because not only do you get gap and goes, but when the market sells off, by the end of the day, it always recovers. And again, if I zoom in a little bit more, you can see right here from Tuesday, you had a very, very nice sell-off. Took us down to a key master level of 126.20 on the SPY on this chart, which again mirrors the S&P 500. And then again, the reversal late in the day. The next day, you gapped lower, but look at the reversal again, POMO saving the day. Then again, on Thursday, you had a little bit of a move up and then a reversal as the dollar gained some strength. Then by the end of the day, the market chopped back up. Again on Friday, the same thing. A sharp down move all the way to a double bottom here at 126.20, and look at the move back up. So it's very clear that the combination of light volume and Federal Reserve propping continues to prop the markets up. And again, going into next week, you can expect the same until we see otherwise. Make this market, and that's the one thing I want you guys to look for next week. Make this market prove that it can't do it. Look for a close at the low of the day on a sell-off. You get that, you can see continued sell-off. As long as you do not see that, continue to believe that the market can be propped up and will be propped up, and keep a neutral to small upside bias, all right? And again, on Friday, it was a great sell-off, no doubt about it. The markets were down on the Dow almost 100 points, but by the end of the day, you were only down about 22, 23 points on the Dow. NASDAQ was only down 7. S&P was down about 2.25 or so. So again, the propping continues. If I zoom out on the charts, guys, take a look at this. Every time you see this type of event, it's been propped up. This is going back to basically the beginning of December here. I could even go back further, but here you have a little sell-off on the 8th, the sell-off here, and then look at the push up. Here you have a little sell-off, and then the push back up. Here you have a stronger sell-off, and then push back up. Gap down, push back up. You can see it's lasted now for literally 2 to 3 months, this event, where you've seen the markets really not have any major sells because, again, the propping continues, the inflation continues, and the asset bubble continues. And I don't mean general inflation as in terms of price inflation. That's going on in food and energy, of course, as we've seen with oil and food prices going up. I'm more just talking about the inflating of the stock market in order to make the average American with the 401k think that they're richer, thus spending more money and so forth, and that trying to restart the economy. All right, now we're going to zoom back in here, folks, because I want to talk a little bit about major levels to watch on Monday for those of you that are chart watchers. First of all, good recovery. If you continue up, this is going to be your spot right here. This is at 127.60, and if you get through that, you're going to go to a double top 52-week high, 127.80 to 85. If you get through that, the 128 level on a scalping basis will be a good even number play. And then ultimately, if on the daily chart you confirm above 128, and this is a daily chart now, you look for 130 to 131. So again, there are some levels to watch here on the upside. There is a possibility we could see more upside, although I think we're entering now the second phase of this year, and again, 2011 is going to be a very choppy market with big moves up and big moves down, in my opinion. But I think what you have to be now looking for is a market that is overbought in terms of these levels. Whether or not you stall out at the 128 level, the 130, 131 level, you start to look for a little bit of a pullback on certain stocks that are done or overly bought at this point. Throwing out a couple names, you got the Chevrons, the Exxons, you got the Apples, the Amazons. Some stocks like that do need a little bit of a pullback, but again, the first week of the year very unlikely because the volume is light, and also you do have new money flow coming in. Remember, the first week, possibly even into the little bit of Monday on the second week, you could have some money flow. We'll watch the futures obviously Sunday night to get a better sense of that. All right, now I want to go to a few different things. First of all, let's look at the 60-minute chart. We do have some trend lines here, but the most important thing on this chart here, you had a little bit of a bear flag. Let me just erase some of these lines because I don't want to confuse too many people here. We'll erase this one for now. You can even erase this one. But see this chart right here? You had a nice bear flag. All right, see, that's down move sideways consolidation on the 60-minute. This is the 60-minute SPY, which mirrors the S&P 500 on a 60-minute time frame. That bear flag does play out on Friday, as you can see. You can see bear flag, and then it plays out early. However, it reverses. Now, many people would look at this and say, oh, look at this. This is another bear flag. It is, in terms of a bear flag, correct, but I want to make one point here. You see the bottoming tail here? Whenever you get a bottoming tail and a bear flag formation, and again, a bear flag is a sharp down move with a sideways to up, slight up consolidation. But when you get a bottoming tail there, and again, notice how it hit the pivot point right here, that often takes a little bit of steam out of the bear flag and will oftentimes make it fail. So just don't be surprised if, again, this fails. Now, it could still work out, but it's more of a 50-50 now. All right, this pattern right here, because it was a perfect pattern formation, still had the 20 underneath, was probably about a 75% chance of a play out, and it does play out early on Friday. This one, because of the bear flag, is probably only about a 50-55% chance of playing out. Therefore, it's half. You don't necessarily play those in terms of that. Okay, so just something I wanted to point out there. If you zoom out on the markets, you can see the run we've had of late, really since late. Well, this is really Thanksgiving right here. You had a little bit of selling and a little scared money based on European issues and North Korea, and then again, the market since then has just gone straight up. And we talked about that and we called it. By the way, folks, you do want to join the research center. Make sure you're involved in that research center. It is the best tool to learn, to get calls in, swing trades in, to get education, to get market guidance, to get action on oil and key levels on oil, gold, the dollar, you name it, we cover it all. Plus, you get small cap picks. I've been throwing out a ton of small cap picks that have just been home runs lately. I think we're going to probably be releasing a hidden gem tomorrow as well. That's going to be fantastic. And again, a big mover expected there with a huge possible upside potential of 50% in my opinion, possibly even more. So again, these are just things you want to be paying attention to. You want to be in that research center, getting involved, and again, making the money that the pros are making the money that our members are making. All right. Let's go to a couple other charts here. I do want to discuss the dollar. The dollar, again, was very fascinating last week because if you look at the 60-minute on the dollar, and let me just zoom in here a little bit, the dollar actually had a very strong week last week. And you might say to yourself, but wait, doesn't the market usually go down when the dollar goes up? And the answer is yes, but not so much. It's not as simple as just saying it's inverse all the time. There are other factors at work that can basically skew that. Now, intraday, if the dollar does tick up, the markets usually tick down. But on a basis of where the dollar goes overall, it's more of an issue of, okay, dollar up, market down, yes, unless you have extracurricular things going on. And the extracurriculars last week, the ADP jobs number on Wednesday was very, very good. Light volume always skews it. Light volume controls all. POMO controls all. Federal Reserve controls all. If the Fed in light volume wants to push the market up, they can. Frankly, in light volume, I can almost push the market up myself. So I'm just giving you the idea that it's not that hard to do. The Federal Reserve, with the bankroll that they have, since they are the ones printing money, if they want to print, if they want to push a market up, as long as it's not super, super heavy, like 300 million plus on volume on the SPY, they're going to be able to do it. So regardless of what the dollar did last week, based on new money coming in the markets, POMO, light volume, the markets again continue to move up, even with the dollar going higher. Now again, as volume increases in the next couple weeks, that's going to be harder for the Fed to do. Again, light volume, they can do it very easily. Heavier volume, not so much. So again, look for a return to up-down dollar and the inverse to the markets. In relation to the dollar here, folks, very impressive move. You can see you're continuing to hold right into resistance here. This trend line is a very, very key resistance on the daily chart. From this pivot point to this pivot point all the way up. See how it's running into. He ran into it on Thursday, and then the line moved up a little. It's back into it Friday. Watch to see. This line should work as a little bit of resistance. I do expect a small pullback on the dollar, although there's always a chance that you go to this double top blue line or the 200. But I think in the short term, anyways, you look for a pullback on the dollar. My guess is early in the week. That could be enough to prop the markets up early in the week. We'll watch very closely and see. And again, I'll be watching the futures tonight with like a hawk to see where they go. But again, just notice that resistance line. That resistance line should work pretty well. Again, if you get over that and really take it out. Then blue lines next, and then ultimately the 200 moving average. And again, this is the UUP chart, which is the dollar index ETF. Okay? Now let's go over to the gold chart quickly. The gold chart here, we can take a look at the intraday on the gold. Gold overall had a rough week, folks. As you can see here, from the third, you closed all the way up near the highs, the triple top. If I show you the chart on the daily of the GLD, look at the triple top up here. 1, 2, 3, and then the collapse. Now you have started to make a little bear flag pattern with 2 moving averages above and this trend line connected through. All right, you could even make a case that this is a head and shoulders pattern, which is a very bearish pattern on the daily chart, but we digress from that for now because that's more something we discuss in the research center. All right, but going back again to the charts, you have been chopping sideways here. It'll be interesting to see if gold starts to collapse a little bit more in the coming days based on the pattern formations on the daily, or do they save it? Technically, you have not confirmed below those breakdown points on the daily without in the money stocks confirmation signals. You have to be wary until it actually happens. Once it starts to collapse, and then again, jumping on board is probably the right thing to do for the short side, but again, it's a wait and see based on lack of confirmation. Again, if I put the daily back up, yeah, it's nice that you're below these lines. You haven't confirmed below yet. All right, so again, they could easily gap it back up, and then all of a sudden it plays off, and they could actually reverse it to the upside strongly. If you confirm by taking out these pivot lows here, then it should be in play. And again, you really want to see a close below for official confirmation, but even taking them out could be decent. The USO finally had a little bit of a pullback last week. All commodities did, which makes sense because if you think about it, the dollar ran higher pretty dramatically last week. So again, that's showing us that you do have a little bit of a pullback here. Notice how you hit the 50 moving average and bounced. Ideally, I'd love to see some more selling to the 200 on this, but you never know what's going to happen. You are some support based on this pivot point hit on Friday, and the oil did bounce up, or the USO did bounce off and closed only down 1 penny on the day. A couple key stocks to look at here, folks. A couple key stocks as always we try to take a look at in these videos. JP Morgan, we talked about this in the research center. If it had gapped up and right in this upper level, this was resistance at 45. Look at the pullback off of that. There were some good trades on the pro trader watch list, bearish side this week. One was U.S. Steel collapsing down beautifully, big money made there. Freeport McMoran was another one. We talked about Chevron had a little bit of a pullback. Take a look at Chevron over this week. And again, these were all bearish plays this week going into the new year that we had up on the pro trader watch list, and they were nailed. Some of the longer stocks that I like, some of the solar stocks, SOLF, I've highlighted this one a few times. I love this chart, folks. Love this chart. I love where it closed on Friday. And again, most likely, I think there is more upside here. As long as the markets don't collapse, the solars should continue. At least these base solars should work. JASO is another one I love. A good consolidation with a target of the 50 moving average. Again, these solars that are on the low end with some good supports below. You can see the 200 moving average. That looks great to me, at least for a short-term gain into next week. All right, other stocks that we want to pay attention to. Let's take a look at my watch list, see if there's anything else. I have to say I do like the TIV at this stage, down in this range. You can see was as high as $1 and change, and it's all the way back to under 50 cents. And again, that was on the commodity craze. Any sort of commodities take a bounce, this should bounce up as well. And again, TIV is the symbol there. You have a base level right here that's going to be good support. Plus, you ran into the 20 moving average and the 50 right here. And again, it has some downside potential here, but it should be starting, at least it looks like it's starting to get on the cheap side, anywhere between here and here. All right. Other than that, folks, let's take a look if there's anything else I want to cover. Goldman Sachs was down a little bit on Friday, but overall, those stocks had very, very solid weeks. Apple Computer was up on Friday. Take a look at Apple. Let's go to the intraday. We'll go to the 60-minute on Apple. Apple, again, has made a small move up last week as new money came in. My question was, before that, it was really in more of a hot holding pattern. If I zoom out, you can see really from here, going back to October, Apple's just going sideways. And then finally, the new money right in the beginning of the year came in and pushed it up nicely. But overall, it's going to be interesting to see if that continues in the new year or not. All right, new money, and I know there's an announcement by Verizon coming up this week, which is expected to be the iPhone being available for Verizon users. But the question is, again, I think that's mostly factored in. I do think Apple may have a little bit more upside as long as the market stays healthy. If the market has another move up, it could go to that 350 level. But it's starting to look a little on the extended side. My big call for this year, 2011, is, especially if Apple hits 350, that Apple will see a $50 to $75 sell-off at some point this year, all the way back below 300. That's my thought process right there. So again, we can always check back at the end of this year and see if I was right. But based on everything I'm seeing, based on competition, and based on everything else, it does to me seem like at some point Apple will be deglorified a little bit anyways and take a pretty sharp hit of $50 to $75 to the downside. And we'll see again if that comes true. All right, folks, I think that's all for today. It's been a fantastic first week of 2011. Remember, the Research Center is where you want to be. In the Research Center is where you're going to get the calls, you're going to get the analysis on everything you could possibly want, and you're going to learn. We're there to teach, we're there to help, and again, it's a pleasure to be with you in this new year 2011, making money hand over fist like we've been doing. And again, we encourage you to come join the party. Take care, folks.